The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for the Futures Hour for TFNN. If you have any questions, it's 877-927-6648. And we'll start out the commodity hour. I put into the Tiger TV a picture of what R.J. O'Brien, one of the larger Merck houses in Chicago, very old firm, and they in fact, most of the firms, the Merck firms, have their own weather people because it's so important, when we're in a weather market. The thing that you don't have to, study this chart or anything, but the thing to realize is that most weather, services are only good for 24 hours. You can't predict the weather 5 days in advance or anything like that. What they're watching in the grain markets at this time is the fact that they have a high-pressure system setting up in the northern United States, and that pushes the hot air down and prevents rain from coming down, and that's why they're having this horrible. That's a real, bird's-eye view and a really short explanation of what's happening, with this. We've had, pretty big swings in corn. We actually took out last week's low in corn by a few pennies. We got down to 7.48. The previous low was 7.50. And then we bounced around and seen, several of these others, that have happened the same way. So what I'll do is I'm going to put it into Tiger TV again because evidently I posted it the wrong way, and which just doesn't surprise me. But anyway, there it is now, and you'll be able to take a look at it and, to see. All I want you to know from this is the fact that the weather is almost impossible to predict. And you can see all these different things that are on there. If you trade off something like that, you're going to go batty. That's why just looking at the bar charts is by far, the best thing to do. We're going to talk a little bit more about inflation today because of what's happening with the euro. The euro today was enhanced by this Mario Draghi, saying we're going to support the euro at at all costs, and so it rallies almost 200 pips. It rallies 250 pips from the low. And as we'll post this chart again, but Steve Rhodes and Tom O'Brien put it into their chart at the top of the hour, showing the importance of the 1.618 level. And it'll give you an idea of why these levels are so important, and which I believe in these levels. So that's why I'm watching them. So just the important part about the weather chart is the fact that it's nothing more than a way of the way they look at it. And believe me, the fundamental people look at these things very, very closely. All we're looking at is if prices are going up, we know there's more buying. If prices are going down, we know there's more selling. When the weather market is finally over, it'll probably be over before the rain comes. And then how much damage is done, we'll have to assess this. But later in the growing season, sometime around September, October, we'll have a pretty good idea how bad the damage really was. And believe me, don't be surprised if it comes out a lot better than what they're telling us. I've seen this happen time and time again where the crop was completely destroyed, and then 3 weeks before it was supposed to be harvested, rain came, and, voila, they got a lot more crop than they actually thought. So this is why, being a fundamentalist is so certainly different than being a technician. Now, there is one other thing that I wanted. I put that dry Baltic index chart in there to tell you that that shows you the shipping of not only just grains and stuff, but automobiles, automobile parts, sugar, all kinds of different types of anything that's actually disposable that they use that goes in international trade is shipped through that dry Baltic index. Now, it gets a bad rap sometimes because they say it's not representative. However, this is what we have to work with. And as you can see, that index has been far from bullish. We've had lower highs when the stock market rallied. It's done very, very little. And so it's not a very good indicator. You can't trade off of it. It's just showing you that economic, supplies or economic activity is actually not nearly as good as it actually, appears to be. So this is something that we just show you that these are things that people are looking at, and that there is one that really caught my eye today from Bloomberg. I absolutely love this one. This is this made my day, folks. I'll tell you, if you get a chance to go into Tiger TV and take a look at this, this is the Bloomberg's waste carloads. In other words, how much waste is going out of the economy. Now, you figure if people are using a lot of stuff, there's going to be more waste, going in, and that is not what is happening. More and more of the stuff is, the amount of waste that is being just getting rid of is not nearly as much as it should have given the consumption. Now, what I did was I contacted Michael Bloomberg today, and I told him, I said, you should rename this. It's right now it's the AAR waste carloads, and I think they should rename it to the MCW index. That's for the Madoff-Corzine Wassendorf index of waste. So when we see something like this, we'll know that we're wasting our money. But this tells us that the economy is not really, if this is a correct chart, then this tells us the economy is not booming like they're trying to tell us. Now, I'm working on a special report because we're coming into this August 3rd date that I think is going to be the mother. The August 3rd date, to me, folks, is as big as the one from March the 9th of 2009, which was the mother of all lows in the last 5 or 6 years. And I think that's what we're going to be looking at if we get into this spot here into August 3rd. So this is what we're looking at, and if we need to just be patient here. We've only got a few more days. We've got tomorrow, and then we got 3 days next week. So we're within 4 days. They've hammered this market down several times, and it yet keeps coming back little by little. And if we can get it up there one more time, that would be an ideal situation coming into the full moon of August the 3rd. However, if it doesn't get there, that just means that it's going to be a sell at a lower price. That's my opinion. We will know if we were wrong on this by August the 10th, at least 1 week after the August 3rd, if we're not heading down rapidly, or at least started down more than we are now, then I will assume that this Bradley model is not going to be correct this time, and we will have to wait to see if it's going to get to that point where we really need to be. Now, if you remember going back, I think it was sometime back in June, I believe, we talked about this scenario unfolding, and so far it's done pretty much exactly what we thought it was going to do. It bottomed in early June, actually on June, it bottomed on June 6th, which was the 4th was the actual bottom, which was the lunar eclipse and full moon. And then the 6th was the P-index date. That's when the market was up more than 300 points. And now we're rallying right into this spot, and this is what we thought it was going to be as a relief rally. It's gone no higher than the 618, and the Russell 2000 has not done nearly as well. The Dow went a little bit higher. It went up to the 786, but the other one didn't. I know this is a commodity show, but this is all commodities, because when we start this consumption thing that we have going on right now, and it starts to turn down, we're going to be looking at the market going down from August into March of 2013, and that is a long time. The good part about that is if the market's coming down and it starts to come down hard, this means that there might be a lot of change in the electoral process here, where we get rid of some of these congressmen and representatives of senators and stuff that have been doing a horrible job, and people just get tired of it. That's historically what we'd like to see, but whether we get to see that or not, I don't know. That's the only time I'm going to be on my soapbox this morning. Okay, So we finished with that. Now, what I'd like to do is to give you an idea of what I was watching today when we talk about the gold market, because I've been watching gold very, very closely, and we finally did reach the point where we have turned the corner in the gold market. So if you have a chance today, I think this is one of the more interesting charts that I have for the commodity hour today. And it's in the gold chart, and all I did was go down to a 60-minute chart. And the thing to look at is I've highlighted over the last 5 days from July 20th to July 24th, the period where the gold would go down to the 786, a retracement of the previous swing, and then it would rally up to the 786 retracement of the previous swing, and then on yesterday, the day before yesterday, on the 24th, it came down one more time to touch the 786 one more time, and from there it exploded, to the upside, and we moved better than $40 an ounce, and we've broken, the gold out to the upside. Okay, we're going to be taking a break here, but we've got a caller from Rick in British Columbia. Are you there, Rick?
How you doing, Larry?
Good. Listen, we're probably going to be in a break here soon, but let's go ahead and start, and stay with me during the break, okay?
Oh, yeah, you bet.
Okay, what can I help you with?
Well, Merkel's on holidays right now while whatever his name is shooting his mouth off. Merkel's the one making the decision, so that's interesting. But the euro is what I want to talk to you about.
Sure.
And, we could get a rally in the euro up to your date, because quite often the market likes that. But but it looks to me like we still got to retest the lows around, I think I wrote the number down. I think Tom mentioned it around 118.75 or something like that. That happened, a year or two ago. I got to dig up the chart on that one. But
I think we'll definitely go that, there's nothing definite, but, based on the chart that I put into Tiger TV, over the last 6 months, we made a 1.618 expansion down there at that 120.50. And then we also made the 1.618 expansion of last week's low at the same price, and I think that's the reason why we had this explosive, move coming out here. I don't think it'll get much higher than 1.25 on any rally. Stop and think. We went 250 points in a matter of about 8 hours, so
yeah.
It can easily go another 250 points, and that would take you up to the 125 area. The key thing I'm watching, Rick, is the date. I mean, this August full moon coming in here is a real monster on a Bradley basis, on an astrological basis, and a technical basis too, because it has some historical precedence. We're going to have to take a little break here, Rick, to
hang around.
Take a break. Stay with me here, and we'll talk about this in conjunction with the U.S. dollar. Okay?
You betcha.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Rick, are you still there?
Yeah, I am, yeah.
Okay, I put into the Tiger TV the U.S. dollar index, and, that represents, 53% versus the euro, because that's how much it's weighted. And you'll notice when the euro was making that 120.50, we were making an exact 1.27 on the dollar index at 84.43.
Mm-hmm.
So that, and then you can see the big drop that we've had in the dollar index, which corresponds to the movement up in the euro. So that tells me that's a major top in the dollar index, and also probably a major bottom in the euro, and we could get a huge rally coming into just 4 or 5 more days. Now, I'm not sure everyone remembers or knows the fact that the Fed meets on August the 1st, and the ECB and the Bank of England meet on August the 2nd, and that's within a day or two of what we're looking at August 3rd. So this might be all, some type of a catalyst that we might see.
Are you looking for us to rally into that point? I think you are.
Yes, I think we will. Well, we definitely rallied. We rallied 250 points in about 9 hours, so... And most of that happened in 45 minutes. So, yeah, I do think we're going to rally into that. Can I hope for just a second? I know that's a terrible trading thing to say, but my biggest hope is that we could rally really strong in the stock market up into that August 3rd date, that full moon, and that's the one that I'm really, that would fit perfectly with the Bradley model. It should fit perfectly with the the 3 drive pattern, to take us up there to that. Maybe we could get as high as 1385, maybe even higher. I don't know. It doesn't take much to move these markets anymore, but that would be my ideal situation. Much like we were coming down into March the 9th of 2009. That's what we were looking for, and now we're looking for something just the opposite to coming in on August the 3rd.
Yeah, well, the reason I mentioned it is I see a lot of head and shoulder patterns on gold stock.
Yes.
For example, if you put Newmont on a 3-month daily, and I think we can rally into the shoulder. I'm using that one. I see it in Canada too. There's just tons of them. And as long as we don't break the shoulder, the head and shoulder pattern is still there. And right now, you have a small inverted head and shoulder, which you could take Newmont up to $49 to fill that gap. And then that would correlate with your 125 on the euro, and then I'm hoping for that 118 retest down at the lows of the euro, which would take, obviously, gold down again, is kind of what I'm looking for, but, I'm just speculating here.
I understand. Just can I give you the most I ever learned from Tony Robbins? I walked on those hot coals. I know a whole lot of people got burned this past weekend, but I had walked on hot coals with him several times. But the most important thing that he ever, told me was that all of our frustrations come from unfulfilled expectations. So don't try to expect too much. Just try to react to it. I know I'm guilty of it. Everybody else is too. But all of our frustrations are from unfulfilled expectations, whether it's our loved ones, our children, the markets, or whatever. That's where our frustrations come from.
Oh, yeah, exactly.
Could we take just a second while you're still here and talk about one other currency that I think is pretty important, and that is the dollar versus the yen. We're 8 months along into a rally with higher bottoms, and we're down here testing the 786 retracement again. And some news came out of Japan that hasn't really filtered in, I don't believe, and that is that the retirement people that run the like the Social Security of Japan, have had to start to sell Japanese bonds to make up the deficit for the aging population that they have, and it's causing them problems. And they're going to have to change their asset allocation. They're going to have to take either greater risks or actually cut back entitlements. So this could be a reason for the yen to finally actually turn and have some type of a move. Remember, the yen used to be at 360, and now it's at 78. So that's one large move, folks. So, we're really watching this one very, very closely. We caught the bottom down there at 75, and now I think we're really close to making another bottom down here around this 750 level. So we're watching it very, very closely to see if that's going to make that spot.
Well, I'm looking at it the opposite way. I'm looking at 128.
Yes, that's the reverse. Correct. That's the reverse.
Okay, and yes. I can tell you that everything from 126 is a false break, which would correlate with what you're saying. You want yours to go up, or you're speculating it's going up, right?
Yes, and you're looking at I'm looking at the dollar versus the yen. You're looking at the yen versus the dollar.
Okay, it looks that way. And 126 at the number I'm looking at. It's a false break on volume there, so on a weekly especially. Okay, well,
thanks for calling in, my friend. We got to take another break.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV a picture of a weekly sugar chart, and you can see the ratios when you get a chance. That the fact that this past week at 2340, we hit a 61% retracement off the previous week. What's interesting about the sugar is that we have lower tops along the way, but it's a beautiful chart looking at the numbers. Sugar is a very large commodity, and it's used all over the world. It's not nearly as big as corn, but it's one of the larger ones that we have. The thing that we want to look at now is we get back to the grain markets for a second. I just want to show you over the last week the big swings that we've had in the corn market. We're having 40-cent swings in corn. Now that's $2,000. That's a huge amount in the corn. I think the margin's only $3,000, so it's moving about 60% of the margin value every couple of days. But the ratios that it makes on the expansions, it makes the 1.27. And on the contractions, it makes the 7/8/6s, and it makes a lot of AB equals CD patterns. It's a wonderful market for trading, but you must trade it electronically because it's traded 24 hours a day, with the exception of an hour or two that closes weird hours. I don't even remember what they are, but I don't like to trade during the times it comes up to close during that time. But it trades about 20 hours a day. And it does enough volume overnight that it is something that is tradable, but it does follow the patterns, really nice. So this is what we're looking at now. As far as the ETF for corn, I don't trade that. I haven't looked at it, and unless somebody asks me, I'm not going to look at it, because the futures give you everything that you can ask for, because you have great volatility and liquidity. It's amazing. Even in a weather market, the liquidity is just spectacular. Far better than when I was on the floor of the exchange, when we didn't have these fancy machines. All we had was the ticker tapes, or at best a Reuters machine, or later on we had a Banco-Remo machine. But now, you have access to everything in the world, right at your fingertips. So that makes it, a whole lot easier to look at it. Now we have a situation, as we all know, that it's going to affect us all because of the higher prices for everything that we're looking at. However, I do see some signs that we have possibly made a major top in the soybeans and potentially in the wheat. And the reason why I say that is the fact that we've had some really parabolic moves. And if you'll take a look, if you go into Tiger TV, and we all know the Thunderbolt pattern, which is the ABCD pattern, you'll see the long-term weekly. It's a daily, but it goes back several years, and it gives you the price way back in 2006 when meal was about $150 a ton, and now it's a little better than $500 a ton. That's a huge amount in dollars. That's over $40,000 in the move, and that's a perfect AB equals CD pattern that is formed up into this level. And if you go back and look at long-term weekly charts, it makes these patterns all the time. So we're having our first indication now that there's a possibility that the bean market is, potentially has made a top. We have, beans have dropped over $7,500 a contract in the past, 3 or 4 trading days, and that's with very little rain coming across, the Midwest. Now, the beans would be the last to pollinate. Corn is where the big problem is. They need to get that corn, have some water, or it's already in big trouble, but they need to get it now. Whereas you can wait all the way till the end of the July or middle of August to get a big rain in the bean plant, and it will give you more more yield on the product. That's old fundamental stuff. When I used to listen to fundamentals, they're still back there in that old gray matter of mine, but I don't like to use it very much. I just try to look at the overall patterns of the things that I'm watching. Now, into something like that, someone asked a question if there's an ETF for soybeans. The only one I know that's even close is the DBA, and that has corn, wheat, soybeans, and cattle and a few others in it, but it's weighted heavily with corn, wheat, and soybeans. But believe me, it don't look anything like this chart. I mean, it's just totally different than the chart that we're looking at, for the soybeans themselves, which it should be, because you're looking at a speculative market that really is popping. I mean, this thing, it's moved thousands of dollars. It's made some people very rich and some people very poor. But this is the reason why we're in this business. Is sometimes you're right, sometimes you're wrong. Okay, now we're going to take a look now at the other part. When you crush a soybean, you get 2 parts. You get meal, which is about 75% of the bean, and then you get the oil, which is 25%. Oil is the shortening and oil paint and margarine. And it's got so many uses, it's just absolutely unbelievable. But as you'll see from the chart, on the daily chart going back several years, that we've actually made lower tops in here during the worst drought that we've had since 1974. That's not a good indication for soybean oil. Now, the reason why soybean oil is not going down as much is because it has a lot of competitors. It has olive oil, canola oil, corn oil, just a whole bunch of them. Whereas with the soybeans, you have very little, because the soybean meal is the protein, the real heavy protein that they feed the animals, and that's why it's important. Now, there's a thing in economics that when I first look at this fundamental stuff, back about 50 years ago, that the demand for soybeans has inelastic demand. In other words, no matter how high the price, people have to buy soybeans. That's the bottom line. And this is why with the soybean oil they can convert from using soybean oil to other oils for certain things. Now for paint and things like that they can't, but for edible things they can certainly move to canola or corn or some of the others. Of course they're not going to be able to convert to corn oil because there's going to be very little corn oil available. But why isn't soybean oil going crazy, at least taking out the highs from April? I mean, the highs from April doubled in price in the soybeans and also in the corn, and yet the soybean oil could not get any higher than the 61% retracement. So this is a first sign that something else is there that could be causing a problem. So I've never recommended going short corn in this market. I think the best thing to do is to wait for the little Gartley that you'll get eventually when the top is in, and you'll sell that rally back. You don't have to be a hero or to try to pick a top, because there's only one or two people that ever pick the top, and they don't trade anymore. So the thing is to find a low risk entry, and right now there's nothing. You just wait and watch, let them have some fun, and that's what your job is to control your risk and get lower entry points, low risk entry points. That's really what you're trying to do when you're in these wild markets. And believe me, we are in a major weather market like we haven't seen in many years. So now I want to get back to something that Rick talked about from British Columbia, and we were talking about, and this was going to be my trading recommendation here for the next few days, because we talked about gold, the fact that it had broken out, and it's broken out dramatically, in my opinion, and I think we've got a chance here, for the gold to really have a pretty good move, and we have finished a bullish Gartley down here in the excuse me, I lost my train of thought, in the gold and silver index. And so we are about $4 or $5 above the low that we made just the other day, and I'm going to put that into Tiger TV. Take a look at it. We've been down for it's been almost a year and a half, because we made our high back in November of 2010. So we're into 1.5 years of a bear market in this, and it's holding up relatively well. The risk here is only $4. If it's trading at 147.50 right now, and if it gets below the 142 level, so $5 risk on a $142 stock, I would say sayonara. Now the good part, there are two things that could be good about this. If gold is really breaking out to the upside because of the euro printing money or whatever it happens to be, God only knows they'll make up enough excuses. But the thing is that this is the first bullish Gartley that we've had that's even formed in the last year and a half. And so if you'll look at that chart into Tiger TV, you'll see that on the way down, it formed three perfect bearish Gartleys, almost equal distance apart. The harmony was absolutely unbelievable. They were incredible places to go short. One was at 227, and it dropped to 172, the 50 points. The next one was at 218, and it dropped another 50 points down to 170. And then the last one, which was the big one, went from 207 down to 43, which was 60 points. And now we've got our first bullish Gartley down here. So this is where you want to nibble at something. And if I'm wrong about the stock market and everything goes up past August the 3rd, the gold stocks will be pulled up. But the gold stocks can still go up even if stocks go down, because if gold rallies, the gold stocks will probably follow along. But the good part here is the Gartley pattern has formed, and the fact that you don't have to risk very much at all here. It's very, very small, and that's the ideal situation of what we're looking at to enter the market. Now, I would be remiss if I didn't bring in the Achilles heel of trading. Of course, we're still waiting for the market to hit. And we're going to talk about the Treasury bonds here, folks, because there's a slight chance, and I say it's a slight chance, that we have made the high in the Treasury bond market, and we're getting ready to go lower. The reason why I say it's a slight chance is because we still have a target up at this 1.618 level at 154.24, and that's part of it. The second part is that we have moved very little in the last 2 days, especially today with the big move up in the market, and that is another sign that the market is still not finished, in my opinion. Notes have made new highs. Bonds have made new highs. All I'm waiting for now is August the 3rd. Now, August the 3rd, I think, is going to be a watershed day, just like March the 9th of 2009. And those of you that were not in, the Tiger Den or Tiger TV, back in those days, I will put in that chart just to show you what it was looking like, and the fact that the world was coming to an end, and nobody in the whole world wanted to buy any stocks or anything, and that was the best time to buy stocks. We had a butterfly pattern at the bottom. The market bottomed on the actually bottomed once on the 5th and against another on March the 9th. And I remember at that time I said I thought it would probably be the biggest short covering rally we'd had in 50 years, and it actually was, I think, the biggest short covering rally in just about 50 years, as I recall. So just remember, I'm wrong a lot, but I'm also right occasionally. But the good thing is I try to keep the risk relatively small. So watch the gold index, the XAU. You could also pick a couple of gold stocks if you like. Newmont, Rick was talking about Newmont that looked, relatively good. And I like the index itself because it's easy to see. It trades relatively, it's very liquid, so it's a good thing to it's a good thing to be watching, for buying an overall complex for sure. The second thing is silver has still not gotten out of its way. We are, basically trying to see if these bottoms in silver are going to hold. I mean, gold has had a tremendous rally, and silver has, basically can't even get out of its own way, which is really not a good sign. And I'm of the opinion that we are going to be coming into a deflationary period here pretty soon, and it's going to be pretty hard for some of these things to actually, move higher. But if you take a look at what's happened to silver, given what's happened to gold, you really have to be scratching your head to say, why this thing could go. That doesn't mean it can't change. One day we could come in here and silver could be $2 or $3 higher, and on its way, to where it's going. It's held a support at that 25 level, 26 level, quite a few times now over the last several weeks. So that part is good. But the other part is that it's had very little rally, and that's why we want to alert you to the fact that it really needs to get above around 29.5, about $2 an ounce from where it is. And silver moves very, very quickly when it moves. So we do have we got a break coming in here. Shucks. Tell me about the break.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. This is Larry Pesavento again, wrapping up the show. We're going to, finish up with bonds, not the bonds, the notes. I wanted to show you the note chart because it made a 1.27 expansion up there. It's only backed off a few ticks. I mean, not even a half a point, which is nothing in bonds. Notes. The bonds backed off a little bit more than a point, but have taken some of that back. So that's another reason why I don't believe that we have made a top. I have to wait for August the 3rd. This is a big date, folks. I like cycles. This is the one you wait for. And, whether it works or not, I don't know, but this is what we have to do. It's doing what we thought it would do, so, just have a little patience, and let's see if we can have one more little jab up into this area and take a look at it. Now, someone also asked me if I would be kind enough, I mean, it's my job here at TFNN, is to talk about a little bit about Newmont, and what I'm going to do is put a chart going over a year and a half on Newmont Mining and showing the relationship between cash gold and Newmont Mining, and you can see that Newmont Mining is, totally collapsed below the cash gold price, whereas cash gold, is held above the 1522. Newmont dropped almost in half, but now Newmont has made that bullish Gartley pattern like what we've had in the XAU, and so if you buy it here, it's around 45.57. You're going to stop it at 43.57, so you've got a risk about around 3.5%, or let's say 4%. And if it's right, you could get a move because all the way up to 55, it could have a 20% move. So that would give you a 4-to-1, risk-reward ratio. And if it moves up a little bit, it could possibly even, get into a risk-free situation if we have one more, jab up in the market for gold. But this is what it's looking like, and so keep an eye on it. The patterns work pretty good. If you look at that chart and into Tiger TV, you'll see that the butterfly top in Newmont occurred in November of last year, when there was a big divergence between Newmont going up in price, whereas gold was not going up in price, and now we have the exact opposite. And what we're looking for is similarities of what happened in the past, and this is one of these similarities. So you add it all together, this is a very low-risk trading situation in either the XAU or the Newmont. And believe me, if they fail, they're going to go down a lot lower, and you'll probably get a lot of chances to sell it if you get that, if it does break down. So right now it's holding up relatively nicely, and it does have I think a pretty good potential for risk-reward potential that you just don't find them this easy. This is a nice pattern. You got an ABCD coming down into the low that we made just the other day, and the Gartley pattern's complete. You got a divergence in positive gold. In other words, gold is making higher highs, breaking out, to the out of the past week's highs, and that's what that's what we're looking for. So whether that works or not, I don't know. Okay, Monday is going to be an interesting day because that's the start of the big week. And the 3rd, which is Thursday, that's the full moon. So I'm going to be on Monday, Wednesday, and fortunately I am going to be on Thursday. So that'll be the day that I'll have you can put my feet to the fire and see how we're going to enter some of these markets. But I'll be looking at a lot of different things, and under any stretch of the imagination, I can promise it is going to be interesting, if nothing else, because this August 3rd date is it's just like that one from March the 9th of 2000, and well, it's not as big as that one. That's not quite true, but it's still got 70% of the power that one from March 9th, 2009 had. So we have to watch it really, really closely because of all the things that are happening in the world. One other thing, it's right, August 3rd is a Friday. I won't be on. I'll be on August the 2nd. Ending the show. Everybody have a wonderful weekend, and may God bless.